Over the last month, something's happened in the financial markets that most people never talk about, and it's one of the main reasons that we're actually seeing mortgage fixed rate pricing increase. In that time, the UK government's 10-year borrowing cost has risen from around about 4.7% to around about 5.1% today. And during that same time, the SONIA swap rates have also increased. That is what mortgage fixed rate pricing is based on. So both the 2-year and the 5-year rates have went up by around about 0.4% or 40 basis points would be the best way to put it. So why does that matter? Well, when a bank is looking at offering a fixed rate mortgage, they aren't looking at the Bank of England base rate. It is something they take into consideration, but that's not physically what they are looking at for basing mortgage pricing on. It's these swap rates. And when those market costs in the swap rates increase, lenders have two options. They either take smaller profits or they put the pricing up. And what do you think they're going to do? And that's why in the last week, we have seen a lot of mortgage lenders reprice and putting rates up by around about 25 to maybe even 35 basis points, even though the Bank of England base rate has not budged. And it might not budge. The meeting's next week. We don't know what's happening with that yet. So if you are holding off on a mortgage, waiting for the Bank of England decision that's coming on the 30th, something to bear in mind is that the markets often move before the Bank of England. And it's these swap rates that I've mentioned and the bond market, the 10-year borrowing cost, that usually give us an early indication of where mortgage fixed rate pricing is going to be. And right now, that's pointing towards higher costs for mortgages, not lower costs.